I'm Kalila Reynolds and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to takingstock-ja.com to subscribe to our newsletter. You can click the link in the description box below. I have a giveaway coming up at the end of this episode as well. And look out for the latest installment of Teacher K's Light Bill Maths later on in the show. Now come on, let's get this money.
First up, Sagicor is reporting mixed results for both its select funds, manufacturing and distribution, and financial for the second quarter ended June 30. What was the cause of this? We'll find out from Assistant Vice President, Research and Asset Management at Sagicor, Reynaldo Thompson. And later, the analysts weigh in on the latest market developments. Barita has released the prospectus for its highly anticipated IPO. And Sagicor Group Jamaica is reporting a consolidated net loss of $295 million for the June quarter. We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
US dollar earnings are dropping dramatically, especially arising from the fallout of the tourism and mining sectors. Bank of Jamaica Governor Richard Biles says the country stands to make less than half of the over $3 billion it earns in foreign currency from the tourism sector a year. Already increased demand and falling supplies led the Jamaican dollar to rise to above $150 to $1 last week. Mr. Biles says while banks and other deposit-taking institutions have enough cash, the BOJ will continue to monitor the situation, having already pumped more than $700 million in the system since March. Barita Investments is seeking to raise $9 billion through its additional public offer IPO, according to its recently released prospectus. If fully subscribed, it would become roughly the third largest equity raise ever in Jamaica. That's behind JMMB and Trans-Jamaican Highway. The offer opens on August 26 and is scheduled to close on September 16. Small investors seeking no more than 1,000 shares get a discount and can purchase at $49 each. Hotel workers, farmers, and civil servants also have a discounted reserve pool at $49.79 per share, while the price is $52 for cornerstone investors, Barita clients, existing shareholders, key investors, and non-reserved applicants. Proceeds will go towards Barita's expansion and improving product offerings. Symbiote Investments, which traded as Carousel, has again not found favor with the courts. This time, the Privy Council refused the company's appeal against a ruling in the local courts to revoke its telecommunications licenses. According to the Office of Utilities Regulation, OUR, the decision was handed down on July 21, effectively ending a 2-year legal battle. Symbiote initially applied to the Supreme Court in 2018 for leave to seek judicial review of the Minister of Science, Energy and Technology's decision to revoke 6 licenses that were previously issued to the company under the Telecommunications Act on the advice of the OUR. A trail of rejections led Symbiote to apply directly to the Privy Council for special leave to appeal the matter, but the application was refused and Symbiote ordered to pay legal costs. Operator of all-inclusive resort hotels in the region, Playa Hotels and Resorts, has sold 2 jewel hotel properties in Jamaica, but at a loss of nearly $4 billion. The company sold Jewel Duns River Beach Resort and Spa and Jewel Runaway Bay Beach Resort and Water Park in May to an undisclosed buyer for $60 million, or about $9 billion Jamaican dollars, below their fair value of $85 million or 12.6 billion Jamaican. Playa said it needed the funds for cash flow, but also to pay down on a portion of its debt. Apple and Tesla have both announced stock splits to take effect on August 31. With a stock split, one share gets split up into multiple shares at a lower price without changing market cap. Apple announced a 4-for-1 split, which means 3 new shares for everyone. This means a single share, which was trading at about $460 on Friday, will be closer to $100 starting September. This will be Apple's 5th stock split since going public. Tesla, on the other hand, has announced a 5-for-1 split, also set for the end of August. Tesla, whose stock was trading at more than $1,600 a share on Friday, will be pushed into the $300 range when the split takes effect. Co-owner of Jamalco Alumina Refinery, Clarendon Alumina Production Limited, CAP, will pay off a large portion of its debt owed to joint venture partner Noble to improve its overall equity position in the lead-up to the refinery's planned listing on the stock exchange. Finance Minister Dr. Nigel Clark told Parliament prior to its dissolution that the funds to repay the debt would come from a $136.7 million loan from the government. The refinancing announced by Dr. Clark is projected to reduce Jamaica's debt stock by about 1%. A new 3-year marketing arrangement will allow CAP to sell its own alumina in a similar method to Noble.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. When we come back, we talk Select Fund. This segment of Taking Stock is brought to you by Bulwark Insurance Agent. Insurance made easy. Welcome back to Taking Stock. The results are out for Sagicor Select Funds for the quarter ending June 2020. Select MD, that's manufacturing and distribution, recorded net profit of nearly $240 million. But its sister stock, Select F, that's financial, recorded a net loss of nearly $324 million. So what led to these results? Joining us now is Assistant Vice President of Research and Asset Management at Sagicor, Reynaldo Thompson. Hi, Renaldo. How are you?
Not bad today, Karina. How are you?
Good to see you. So the last time I saw you was at the launch of the Select MD or Select M. I'm not sure what exactly you're calling it. And I remember,
distribution.
Right. I remember too that when Select F was launched, you were a guest on my program on Nationwide, and there was a lot of hype around it. And I really liked what you guys, the idea that you had, and in making it affordable for ordinary people at just $1 a share. However, since then, the stock, in terms of the stock price, hasn't performed as perhaps people had expected. I think last I checked, Select F was at something like 63 cents. Select M was about 74 cents.
Correct.
Why is that, you think?
Well, I think it's primarily just reflecting the overall market conditions. The stock market, as you know, has come off a bit since the start of the year. And the company primarily invests in the stocks on the stock market, so it's just reflecting the value that's on the stock market currently.
But as it relates to especially Select F, this performance was even before COVID-19 and this dramatic decline. For some reason, people didn't have a lot of confidence in it. Why is that?
So let's back up a sec, right? If let's try to speak to the company itself. So, you know, the company is set up with two broad mandates, right? And one is primarily to invest in the financial stocks on the market, and that's Select F. And two is to track the index. That's the financial index that's on the Jamaica Stock Exchange. The idea here is that we have invested in all the financial stocks, well, 25 of the 26 stocks that are on the stock exchange. And since we've launched the fund in August of last year, to this point, the index essentially has come off a bit. Certainly during the COVID time, it has come off even further. But the market has been pulling back since the second half of last year. And that is reflected in the stock price as we have it here. So we've invested, for example, in NCB, Scotia Group, and those stock price has moved. For example, NCB has moved from like over $200 to about $130 now, $135 somewhere there. So essentially, the company is just reflecting that movement in the market.
Right, and I recall as well when Select F came out, it was noted in the prospectus that you have different weightings for different companies that are in the portfolio, NCB being the most heavily weighted. I don't remember, how much percentage does NCB take up in your portfolio?
It's about 35. Yeah, it's about 35%.
35%. So if something happens to NCB, and which has happened, coming down from 200 to 130, it's going to have a big impact on your portfolio for Select F.
Well, it would, given the sheer size of NCB. But overall, I mean, if you look at the entire market, NCB is one of the largest stock, or is the largest stock across the entire market. It accounts for 25% of the entire market. So any movement in NCB will affect the overall stock market performance. And our company, or the company Select F, is set up to reflect the movement in the stock market.
Some people see it as it's a negative because you're losing money if you decide to cash out at this time for whatever reason. But others also see it as a buying opportunity. What's Select F's approach to buying in this COVID time when prices are depressed?
Well, remember, as I said, what we have done is essentially just we're trying to mimic the financial index that's on the stock exchange. So we have already invested in 25 of the 26 stocks that are on the Jamaica Stock Exchange. So our intention is not necessarily to be trading, to buying and selling stocks at different points in time. We've essentially just created the fund so that it mimics whatever the stock market does. So if the stock market is low or falls off, like it has, then the value of the fund will fall off. We do expect that over time that the stock price of all these companies will come back. And so for now, we'll be telling investors, if you have a 18 months to a 2-year window, that was a perfect opportunity for you to invest.
So looking at Select MD, the performance has been a lot better than Select F. Not necessarily, I'm not talking about the stock price here, I'm talking about the performance of the company itself. So give me some of the highlights of that.
I think I'd want to put it in context though, right? From a macroeconomic perspective, I think with Jamaica, where most of the companies operate, Jamaica has gone through a tremendous hard time over the last couple of months. Certainly, the June quarter would probably be one of the worst quarters ever recorded in Jamaica's history. It's very likely. PIOJ estimates that it probably be around 15% or so. Chances are it could be even worse than that. We've invested, and as a consequence of the performance of the economy, right, that would have different impact on both funds. So, for example, the financial fund would be impacted because of the performance of NCB, Scotia, and those companies. Those companies will feel the brunt of the economic pain a little bit more than the manufacturing companies. So, for example, at NCB, the Scotias, those big banks, if you look at their profitability, it's likely to be a lot lower this year and over the next few quarters than the manufacturing companies. So the manufacturing companies, for example, if you look at Grace result recently, Grace result was up tremendously. And that has a lot to do with persons just buying more of their products. And so the company benefited from that. So if you think of it, the financial companies will feel the pain up front. So their performance will be lower. The manufacturing company may feel the pain, later on in terms of their profitability. But for now, it's the financials that are feeling it most. So their value has fallen significantly more than the manufacturing companies.
So you're looking at $240 million in profit for manufacturing and distribution index compared to a loss of $324 million for the financial sector. That's a big difference, though.
Right. Well, it's two things as well. Like for the financial companies, the BOJ had asked, the large financial companies to not make dividend payments. And of course, when persons invest in the stock, you invest in the stock for two primary reasons, right? One, for the capital appreciation that you expect, and two, for the dividend payment. Large companies, financial institutions like NCB, Scotia, and Sagicor to some extent were not allowed to pay dividends to their larger shareholders. And so that's one of the things that has also affected the financial companies. That same constraint wasn't reflected or didn't impact the manufacturing companies. They were able to make a payment their dividend payment. So, that's one of the reasons also, that's why you're seeing the big difference in the performance of both.
Right. So Select Fund, Select F would have been impacted by that, because I know that the BOJ eventually walked it back for some shareholders, saying that they could pay out to the majority of shareholders would be able to receive their dividends, but they said the large shareholders wouldn't. So Select F would have been one of those large shareholders that wouldn't have been able to receive dividends.
No, actually, Select Funds did receive.
They did.
Yeah, we did. We did receive dividends from those stocks.
So then you
Uh,
can't cite that as a reason for the performance then, because you
no,
did
no, no.
receive dividends.
No, no. I'm telling you why investors weren't so happy about the financial sector.
Okay.
And as I say, the fund is just reflecting what the market condition is like. So if investors are shying away from financial stocks, then they'll shy away from Select F as well. That's the point I was making. So yes, we did receive our dividend flow because we're not considered one of the we're not one of the largest shareholders. But just investor sentiment towards the financial stock has changed. And so that's one of the reasons why the financial stocks are lagging the manufacturing stocks.
You mentioned as well that you're invested in 24 of the 25 financial stocks. Which is the one that you're not invested in, and why?
ISB Financials. It has to do with liquidity. So we're trying to get, well, our intention is to get a representative sample of all the financial companies so that we can essentially mimic the index, right? ISB accounts for 0.4%, and it's very small in its relative size to the index. We're still trying to get ISB regardless of its size in the portfolio, because our intention is to invest in a representative sample, and we do believe that ISB is a good stock to have in the portfolio as well. So we're still trying.
You have the new listing, CNWJ Credit Union?
No, it's not in the index as yet. So remember, we only invest in the stocks that are in the financial index.
Why wouldn't that be in the index? Is there a process for it to be in there, or because that is a financial company, right?
Right, this is a financial company, but it not being an ordinary share may be one of the consideration as well.
I see. Okay.
Yeah.
So once it is, or if it is, then you would be purchasing that stock as well.
Correct.
Okay.
Correct.
What are some of the things that you would say to investors right now? Because as we know, this is a difficult time. Confidence in the market has been shaken. Some see opportunities, others are most people I'd say are very nervous about investing right now, if they even have money to invest to begin with. But what would you say as somebody who is in this business, and I'm sure that this is something new for you too?
Well, here's how I'd answer that. The truth is, when you invest in equity or you make an equity investment, you have to be mindful that the stock price can fluctuate. In other words, there'll be times when it is up, and there may be times when it is down. The key is to ensure that you've invested in good equities, in good stocks, in good companies that can ride through the down period. Investors who would have invested, let's say last year with the fund, may have concerns now. For one, the stock price has certainly fallen off, but that's just reflective of the overall economic condition and the market itself. If your holding period or your investing period is 2, 3, 4, 5 years out, then even now would be a better time to pick up some more stocks. If you're interested in most of the financial stocks are significantly lower now than they were last year. So, those are some of the stocks that you can look at to invest in. But again, you have to be patient with your investment in equities at this time. So, meaning that if you invest now, your exit period or the time period for which you're looking for your return should be 18, maybe 2 years from now.
So have some patience.
Have some patience. That's what I would say.
Select Fund has room for different classes of shares. For example, you started with select the financial fund, financial index, tracking that one. I think those are your Class B shares. And then the
Correct.
manufacturing and distribution index is your Class C shares. And there's room for D and E as
Correct.
well to track
Correct.
other indices. Can you give us a hint what may be the next index to be created?
We have our innovative box here, innovation box. And at this point, we're putting in different ideas inside of the box. Later on this year, we'll decide or pick from some of those ideas that we have in the box. And then for 2021, we'll see if we can roll out any of those innovations, any more ideas that we have in terms of a fund for Class D and Class E as well.
So you are looking at 2020 for another index, for another fund?
Well, no, 2021, next year.
Oh, 21. Oh.
Yeah. Well, put it this way: if our intention was to use 2021 and come with another one as well. Certainly, the market condition currently doesn't allow for a new fund to do an IPO at this point. So we'll be dictated. The market condition will dictate what we are able to do. But certainly, if it improves, then in 2021 we'll be considering to do a Class D.
There are not a whole lot of different types of uniform stocks to choose from, though. So you have to get kind of innovative in how you combine them. So financial was obvious. Combining manufacturing and distribution is there. One that comes to mind is maybe energy, but it's still limited. It's only like maybe four or five. I'm not sure. JPS hasn't listed yet, but they have intentions to list. Maybe entertainment. I'm not sure. What are some ideas that you guys have been tossing up?
Well, put it this way. I think later on this year, you'll probably see a little bit of some of the ideas that we're thinking of. And then early 2021, you'll see exactly what we're coming with. But we're thinking not just Jamaica, but we're thinking regional. So, we're trying to do different things with Class D and Class E.
Well, we'll look out for that then, Renaldo.
Sure.
Thanks for joining me.
Yeah, man, I'm very happy, grateful that you have us on to discuss select funds performance for the quarter. Thanks.
All right, bye.
All right, cool.
Check out Teacher K's Light Bill Mats up next. After that, I've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy. It's time for me to put on my Teacher K hat again. I have some more light bill maths for you. Today, class, we're looking at how to calculate the taxes on your light bill. Now, this was a question from the comments section of my Money Mondays JA video, How to Understand Your Light Bill. If you haven't seen that video yet, you can click the link up here or in the description box below if you're watching this on YouTube. Big up to Cedric and Natalie for pointing this out. You guys both asked, how do they arrive at the taxable and non-taxable figure? Now, I'll be honest, this one really had me just scratching my head like, what? I was literally up all night trying to figure out how they arrived at the taxable charges. Now, I love a match challenge, so I couldn't stop until I figured it out. It was really bugging me. So grade 1 CXC maths in third form, guys. Hey! But Natalie R., you were right. It just wasn't adding up. So I contacted JPS to find out, and they sent me an initial response, and it still wasn't adding up. Finally, I was able to jump on a Zoom call and show them exactly what I meant and what Natalie meant. So they contacted their billing department, and now I'm happy and relieved to say that I have the formula to share with you. Now, first of all, for business customers, the tax calculation is easy. You pay GCT on everything you consume. GCT, of course, stands for General Consumption Tax, and the rate is 15%. But for residential customers, it gets trickier. The first thing you need to know is that your first 150 kilowatt hours are tax-free. So if you use less than that, you actually pay no tax. And if you use more, then you only pay GCT on your consumption above 150. So let's look at this light bill right here. This is where you see your usage, energy first and energy next. Energy First is the first 100 kilowatt hours that you use for the month. It's charged at a standard lower rate and it isn't taxed. Everything else falls under Energy Next, which is charged at a higher rate. The first 50 kilowatt hours of Energy Next are also tax-free. So like I said, in total, you get 150 kilowatt hours tax-free. So on this bill, you have 95 kilowatt hours under Energy Next, 95.85 actually. You take out the first 50, which is not taxed, and that leaves you with 45.85 kilowatt hours, which is the portion that they're going to tax you on. You multiply that by the rate. Now this is the rate over here, $22.49 per kilowatt hour, and you are going to get $1,031.17. Now this is where I got lost initially, because if you look down here, the taxable charges are actually $2,092.08, but we just got $1,000 and change. So where does this extra $1,000 come from? I tried adding some of these other things on the bill, like the customer charge, the foreign exchange adjustment, the fuel and IPP charge, and it just still wasn't adding up to $2,092.08. And that's where we had to call in JPS, and they came through with the explanation. So I already explained how you get the first $1,031.17. The next step is to multiply that by the foreign exchange adjustment rate, which is actually 5.62%. See, I was trying to add in this $200.58 from the FX adjustment, but that's not actually how you do it. You need to multiply your consumption over 150 kilowatt hours by the FX adjust rate, and in this example, we'll multiply $1,031.17 by 0.0562, and this is the percentage expressed as a decimal. So move the decimal point 2 places and you get your percentage. Yeah. So this gives us $57.95, and that brings us to $1,089.12 when you add these two up. But we're still off, right? Because remember, the number on the bill was $2,000 and change. So here's the final portion to the calculation. You have to add in a portion of this fuel and IPP charge. And the portion that we're going to add is everything above 150 kilowatt hours. So the same 45.85 kilowatt hours that we got earlier, we're going to multiply that by this rate, $21.87 per kilowatt hour. And that gives us $1,002.92. So now let's add all three components of the taxable charges. One, our consumption over 150 kilowatt hours, which came up to $1,031.17. Two, the foreign exchange adjustment, which is $57.95. And three, the fuel and IPP charge, which is $1,002.92. And there we finally have it, $2,092.07. Voila! Those are your taxable charges. It's off by 1 cent because we've been rounding off the numbers. JPS's system doesn't round off the numbers, it's just done by the computers. And now that we have our taxable charges, we multiply that by the 15% GCT rate, and GCT 15% as a decimal is 0.15, and we get $313.81. Then finally, we add up our non-taxable charges, our taxable charges, and our GCT, and we get our total, $8,365.45. And there we have it. Our light bill actually makes sense after all. Complicated, yes, but there is method to this madness. Let me know if you have any questions in the comment section below, and stay tuned. Taking Stock resumes right now.
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange remained flat, with the combined index losing 0.01%. 99 stocks traded across both the main and junior markets of the JSE for the week ending Friday, August 14, 2020. 36 advanced, 59 declined, and 4 stayed the same. Nearly 113 million shares changed hands on the Jamaican dollar market, totaling nearly $575 million. Wigton Wind Farm ordinary shares traded the most, taking up nearly 37% of market volume. The stock gained 5 cents to open the week at 79 cents. Select MD traded the second most, with people buying and selling 17 million shares in the company. Select MD lost 2 cents to open the week at 75 cents. And Mailpack Group rounded out the most traded, taking up 6% of market volume. The stock lost 9 cents to close last week at $2.02. Now let's see who had the biggest gains. 138 Student Living Jamaica jumped nearly 20% to close last week at $6.98. Sterling Investments rose 16% to close last week at $3.06. And CAC 2000 rounded out the biggest gains to close the week at $10.46. On the losing side now, Community and Workers of Jamaica CCU deferred share fell 31% to close last week at $2.18. Caribbean Cream fell 24% to end last week at $4.06 a share. And JMMB Group 7.25% VRJMDCR preference shares lost 20% down to $1.20. Market Recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers and Proven Wealth. Welcome back to Taking Stock. I've got The Analyst to examine the week in business. I'm joined by equity trader at JMMB, Clive Charlton, and young investor at the University of the West Indies, David Rhodes. Hi, David. Hi, Clive.
Hey, Kalila.
Good to have you both on. So, Barita has dropped their prospectus. We already knew the opening date, August 26th. Have you guys had a chance to take a look at the prospectus yet?
Yes, I've gone through the major critical parts of the prospectus already.
Okay, Clive, you?
So I've had a look at the prospectus. I've had a cursory glance, I should say, but some of the more salient points, which is the number of shares, the amount being raised, and the uses of this. Of the proceeds.
All right. Well, that's where I am with it at this point too. I've only looked at the general overview. I haven't done the heavy reading yet. We'll share the in-depth analysis for next week. But let's start with some of that overview, Clive. You give us that overview first, and then David, who has actually read the whole thing, not surprised, can give us some further points. So, Clive, you first, the overview.
Okay. Well, Barita is a fairly solid company. It's one of Jamaica's, I think, larger investment brokerage company. It does not necessarily have a commercial banking arm, but it has a merchant bank, and I suspect sooner or later that, of course, make an application for a commercial bank. But in the time being, Barita, since the majority shares were taken over by Cornerstone Investment, they have been pushing aggressively to expand their footprint in the marketplace. And we have seen it we've seen their media presence, as of course, we've seen their financials, they're very much in the news. Now, they have raised capital before, but this time they are seeking to raise between 8 to 9 billion Jamaican dollar by the issuing of upward of 260 million units of shares, probably slightly more than that. I think it's up to 273 million units of shares. The price range will vary between $49 to $52. And of course, as I've said before, it is to expand their footprint throughout Jamaica and regionally, they have stated. And they're fairly specific in where they're going to spend the money and how much they're going to spend in each area.
So you mentioned Barita Bank as being likely. So I noticed where they say about half of the proceeds would be used to expand their regional and local footprint. Plus, they have the money that they had already raised in those two issues last year. So you're seeing that as being enough to capitalize a future Barita Bank?
That is we can only speculate now. What we do know is that they have a merchant bank with the acquisition of MF, Myers Fletcher's and Gordon, MF&G, very, very small outfit when compared to other banking institutions in the country, very small. But there really is a thorough and very long process, regulatory process to go through. So I don't even want to put a timeline on it, but I'm just saying that speculatively, I'm sure that is where they'll want to go to a commercial bank, which is where the major prospect for growth is. You see? So I believe though, but based on what they've allocated, made some allocations, and they did say investment banking and underwriting capacity, which they can do now as an investment bank, investment brokerage institution. You see, they did say working capital needs to develop talent, brand, operating capacity to accommodate the existing growth trajectory, and that well in excess of 200 million. But they are going to place 1.8 billion to seed new managed funds, and another $1 billion to upgrade technology, and another 1.5 billion is to company's investment banking underwriting capacity. So we can see where they are putting the bulk of the fund. They have allocated significant resource towards this particular area, where they believe is where there's more opportunity in the future economy.
Well, they are booked to be on this program next week, so those are some things I can ask them about. But David, what insights can you share based on your thorough reading of the prospectus?
So what Clive was referring to was the Cornerstone Group owning Barita and potentially using Barita and MF&G, which is now renamed Cornerstone Merchant Bank, to move forward to a commercial banking structure. So Barita in the past was what you call this mainly a unit trust company. They've added investment banking arm now and expanded into different forays, as you would call them, through the rights issues, and they now deal with preference shares they did last year. So some of the major points for this APO is that it opens August 26, and there are 4 particular pools. So the small investor pool is between 300 shares, which is the minimum number of shares you can purchase for the APO, to 1,000 shares. So from about $15,700 to around $49,000. It's $49 per share for the small investor pool. Then you have the civil servants, hotel workers, and farmers pool, which is pretty novel for any public offer, which is basically giving those persons in the hotel sector, the tourism sector, farmers, agriculture, and even the civil service like doctors, lawyers, doctors and teachers opportunity to actually start their own form of wealth, similarly to what the Wigton did for thousands of persons.
Yeah, they get a discount.
$49.75. So the original price plan was between $48 to $53, but now it's been reduced to $49 to $52. And then you have the reserve pool for Cornerstone for the existing shareholders up to the opening date and Barita clients. So if you actually own at least 1 share of Barita by August 26, meaning get by probably August 24th to get your T+2, you will be able to actually apply within that pool. And Barita clients up to the opening date of August 26 will be able to actually take opportunities to actually buy into that pool, which is $2. Then the non-reserve pool, which is basically you would call it a general public pool, meaning you don't qualify for any of the other pools that have already been mentioned. That's $2, and that's one of the smallest pools, about 12 million shares. When Clive was mentioning the range for Barita, it's 173 million shares before upsizing. After the upsizing, it goes to 260 million shares. And the capital raised amount in terms of range is from $9 billion to $13 billion.
That's
so
much as 13.
Yeah, so Barita is actually outlined right here. It just if they get the minimum, because if they're to upsize, which is not necessarily impossible, then they would have a lot more room to capitalize on different opportunities. So some of the more nuanced things that persons might not see is that Barita's APO is designed in such a way to actually benefit the price and potential new shareholders, because Barita declared dividend with a record date of September 22. However, if Barita's APO closes as planned on September 16 and the allocation was on September 23, new shareholders will necessarily get the benefit of the dividend. So there is a little space, as I would say, of you actually buying into the APO is potentially closing early and be allocated by or on the record date, where you get probably a 4% dividend yield from Barita shares. And remember, this is a discount to the actual market price.
Right.
There is a funny thing about it. Barita actually has put in Section 18, Note 14, that they can potentially close the offer early, but they won't close it until 7 years have actually passed. And I didn't see business days. I just have 7 days. So in case persons were thinking that Barita would just close it like per regular IPO within the first day, there's a provision in this case to basically say that you know that you have 7 days, and even before the IPO actually opens on August 26th, you can apply right now. So for any public offer, you can apply ahead of time before anyone else.
Based on how much money they're seeking to raise, though, I don't think it would have been one of those open and close anyway. But Clive,
It's not impossible.
it's not impossible, but let's say they do the upsize, the 13, it would be the largest amount ever raised, eclipsing even Trans-Jamaican Highway. But Clive, I want to hear you on the investment appetite right now, perhaps among your clients there at JMMB, because there's been a lot of discussion about whether this is the right time to even come with an offer now. I know I've heard of another offer, another IPO that will be opening this month, August as well. But are your clients having that appetite to come back with money to invest at this time?
In fact, we had a discussion about the timing of this offer yesterday. And Barita is, the new ownership of Barita is fairly aggressive. You know, they have been since. And I think this is one of their strategy also. I think there are template for the rest of the investment industry, you know, as to whether the proper timing to come in. So they're really pushing the letter, you know, if I want a better term. You know? And we applaud them for that. Possibly though, I think we're on the tail end. Even though there's a surge in quite a few countries of the COVID pandemic, even though we've heard talk recently of people, quote unquote, misbehaving with respect to the protocols of COVID, I think we're on the tail end or near the tail end. Why? The economy has opened up somewhat. I said the roads are now busy with traffic. You know, I say more businesses are doing business advertising, etc. So I believe that we're on the tail end. I think they have recognized that and they want to be first the other industries. There are quite a few companies who are set to raise capital, billions of dollars in the marketplace, you see. So I think they perhaps said, you know what, we need to first these people. It's risky, but I think that's their nature by now, we can realize. It's possible that they can raise it. They have what they call priority investors, cornerstone investors, existing shareholder, Barita clients, and key investors. So I have a great suspicion that they've already identified several key potential investors already to raise that fund. But I think it's possible. The appetite in Jamaica really has changed dramatically over the last few years.
Are we really on the tail end, though, Clive? Because we're seeing now where we have double-digit increases over the past week or so. Every day we're seeing 10 plus, even 20 plus new cases a day.
But what I don't anticipate is a total lockdown, the type of lockdown we had a few months back. I don't anticipate that, you see. I think we have learned enough. We have learned how this disease progressed somewhat. We know that there's a vaccine perhaps 6 months away. We know that we now have our medical facilities and systems and processes in place. I mean, it's not 100%, but I think these are things we didn't have 4 or 5 months ago. We now have these. I think people are more educated now, even though, you know, people will get lax if we ease off the public relations and the warning. Yes, but I think we've learned so much, and I think we will just adjust our behavior going forward. I don't think the economy will come back to where it was a year ago or last December, but slowly we're edging in. And I think Barita is one of those companies that have recognized that, look here, this is a new norm, so might as well we go ahead with this thing now, you see, rather than wait later. You see? Now, I don't think, I use the word tail end, and tail end, let's say a little bit away from the tail. Certainly we're not at the mouth or the head of this thing. Certainly I don't think we're in the middle, you know, even though our exposure rate has increased. But with respect to not exposure, not people getting COVID, but with respect to how we're handling the economic side of it, I think that we're more or less on a more stable footing. And I think this is what warrants Barita, give them the option to go ahead with this offer. There's a new investment psychology in Jamaica now. We're seeing that appetite with respect to several fundraising opportunities over the last 2-3 years, and also I think the psychology, even though this lockdown came, even though some persons may not be stunted for income, I think there's still sufficient number of people. If you look at the economy, how much has the economy shrunk by? How many of the total labor force are unemployed? Some might be unwary of long-term income, but the fact is that there's still investable income out there, and I think this is what they're trying to attract right now. They want to be ahead of the curve.
Yeah, so let's look at Sagicor now, David. Their results are out, and they're showing actually a net loss of $295 million for the quarter ended June. What do you make of that?
So operations took a slight decline, but the major point, or as we call, indication as to why the bottom line would have shrunk to that point is because of the X-Fund Association. So I was in the investor briefing on Tuesday where the chief financial officer basically explained that the reason why there is an increase in impairment of the associate and the impairment on goodwill, including the share of loss as called in Sagicor's income statement, is mainly due to the tourism slump. So for those who aren't aware, Sagicor actually consolidated Sagicor Real Estate X Fund, which is a majority stake in Jamziv, which holds the stake in Playa. Playa just released the results their prior week, and they are showing an $89 million loss just for the quarter. So and based on Mr. Holong explained it, Playa taking on more debt right now has actually basically affected the discount rate of the discount cash flow method, which is what they use to test to see they need to impair the results, which has basically resulted in this, as you would say, increase in impairment. This isn't a cash item, so it doesn't necessarily affect cash flow like that, but it's a point of concern seeing that that's basically pushed the Sagicor's bottom line before you separate it into a loss. Because for profit attributed to shareholders, it is still positive. However, the non-controlling interest has significantly increased in terms of the loss. So for the quarter, Sagicor had profit attributed to shareholders of $2.47 billion, which is a very high step down from the $3.7 they recorded the prior year. And that has also been impacted by the credit losses from the banking arm as well, which has seen non-performing loans gone up from 2 to 2.4% as well. One thing I'd like to point out is that although Sagicor is seeing this, as you would say, recording a hit because of Playa, really and truly, the overall group itself, the corporations of employee lines, life insurance, Sagicor Bank and Sagicor Investments is still strong and intact. The X-Fund arm is going to take more hits as the period continues with the current low occupancy rates at hotels and the overall slowdown in the market. So take how you want to play it out, but Sagicor's cooperations are still positive about the whole situation, and I still see Sagicor as a good company. And one thing to point out before I finish my point is that Sagicor's parent company, Sagicor Financial Company, actually releasing the results today after market hours on the TSX, which will basically give us an indication as to how JMMB's share of profit will be affected, and in turn improving the investments limited as well.
Clive, I don't know to what extent you've been tracking Sagicor, but I did see in the Financial Gleaner on Friday where Playa Group has sold their Jewel properties, the Jewel hotels, at a loss. How much do you think this would make a difference if you've been following that one?
Well, yes, I have looked at the value of the asset and how it might impact our Sagicor Jamaica. But it will definitely have an impact two ways. It's direct holding through X-Fund, as well as its holding of Sagicor or Playa's share price. Playa's share price really has plummeted already. This news, publication of their results and the disposal of asset might cause the price, even though it's already reflected in this financial, might cause the price to fall further. So that will impact Sagicor again. That is Sagicor Jamaica. So In terms of JMMB,
To fall, you said you expect it to fall further, so you expect it to have a negative impact?
definitely, yes, it could. And therefore, it will affect the shareholders' equity as well as the fair value of assets held by Sagicor Jamaica through the player shareholding investment assets. You see, so that can have a negative impact. As to how it might impact JMMB, it's difficult for me to say. Our results should be published soon. The quarter ending June should be published soon. So I think the marketplace really is waiting on that. I've had discussion with several potential other brokers, and they are waiting on not just JMMB, but broadly the financial sector. They are waiting on what they call the COVID results, which is the quarters after, this year, but the first and second quarter results.
Yeah.
And then we'll see the impact it possibly will have on JMMB.
Yeah, and that's because JMMB has a stake in Sagicor. Is it 20%? I don't remember.
Sagicor
About
Financial
22,
Company.
right? The
22%.
parent company, regional, yes. Not Jamaica, but the regional entity, the
Right.
parent company.
Right.
Yes.
All right. So that's all the time we have for this episode. I want to thank you for joining me, David, Clive. Always a good discussion.
Well, thank you.
And
Will.
I suspect that we'll have a lot more to talk about very soon too.
Definitely.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers and Proven Wealth. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at takingstock-ja.com and turn on those post notifications so that you can be the first to see all of my videos. The goal is to get to 50,000 subscribers. We want to help people learn more about money so we can all get this money together. This week on Money Mondays JA, we're talking about debt, how to get out of it, good debt, poor debt. On Money Moves JA with Exim Bank, we have more info on intellectual property. How do you value your IP if you want to use it as a loan? Now follow me on Instagram and Twitter at Kalila Ray, and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. And now, the moment of truth. Congratulations to, drum roll please, Garvin Grandison. You won one of our exclusive Let's Get This Money t-shirts. Email orders at KalilaRayMedia.com to claim your prize. Now here's this week's giveaway question. On last week's episode, which two new commercial plazas did I reference during the Analysts as examples that commercial real estate is still doing fairly well? You have until Friday, August 21, 2020 to comment the answer below and win one of these fabulous t-shirts before they're all gone. And by the way, they are going, so if you want one, email orders at KalilaRayMedia.com ASAP. I'm already out of some sizes. Now tell a friend about Taking Stock. Investing is the new sexy, so let's make it cool to talk about money. I'm Kalila Reynolds. Stay safe.